Hello guys, welcome on a daily analytical report with Alpari. My name is Tomasz Wiśniewski and I'm a chief analyst in Alpari Research and Analysis. Well, today everybody's waiting for State of the Union speech in a joint session in Congress. Obviously, Donald Trump will be speaking, and well, in the last few weeks, we are wondering if he will he will give us some details about his phenomenal tax scheme, about his phenomenal idea about the taxes. Recently, we are not so optimistic about that because, well, yesterday he was telling us about Obamacare and health system in United States, that it's very hard to estimate the overall costs of this, and he won't be able to present a tax scheme, this revolutionary idea, before he will estimate what's going on with the health care system. So we will see about the details today. Traders are not very optimistic actually today, as American dollar is a bit weaker right now, which I will, by the way, show you. On American dollar to Japanese yen, that will be the first instrument that we will talk about from the technical point of view. But before that, obviously, we'll speak a little bit about fundamentals as well. So yesterday, Donald Trump proposed a big boost to military spending, and by big I mean really big, 9% rise. It's 54 billions of dollars. That will be taken mostly from the cuts from other departments. Apart from that, well, obviously stocks connected somehow with military advanced higher. He also said that he sees big infrastructure spendings. Also, construction companies, engineering companies had gains yesterday because of that. Well, and apart from that, that would be it from the fundamental point of view. So we're focusing mostly on Donald Trump. Let me show you on the calendar what we are expecting to happen today. So in our 26 minutes we'll have GDP from United States, important data. 2.1 is expected, 2.1% rise is expected. Also Chicago PMI should be influential. As you can see, the previous number was 50.3 and now we expect 3 points rise, 53 points, so a significant increase here is expected. And Donald Trump will be a bit later in the evening. Actually, you can see that on Wednesday night. So in terms of it will be Tuesday. It will be Tuesday in United States, but this calendar is set for European time. So this will be done overnight. Also, before that, PMIs from China. As it's our first meeting this week, let me show you the calendar for the whole week. But as you can see, apart from the interest rate decision in Canada in Wednesday, there's not much of a data. The calendar is rather empty. We do have two important speeches, so we will have Donald Trump's speech tonight actually, and Janet Yellen on Friday. But it will be done late in the evening. which actually is more dangerous because the liquidity will be lower. Asian markets will be closed, European markets will be closed. So just Americans in the market at that moment, which can create a dangerous situation of low liquidity, which can possibly imply the high volatility. Okay, so markets, for example, indexes are rather muted now. We're waiting for Donald Trump, but let me show you other instruments from the technical point of view right now. The first, I would like to start with American dollar to Japanese yen, where we do have this correction which started at the beginning of the year. So 2 months of a correction. Here the correction so far is the conditions here are all right, because the price is kept in a wedge formation. Wedges here highlighted with blue colors. Wedge is a trend continuation pattern, so we should expect that the trend will be continued here. The trend here is bullish. So that's what we expect here, especially that the price is still above 38.2 Fibonacci level, which shows that this correction is healthy and the price is kept relatively high. The most probable scenario at the moment is price testing 38.2 Fibonacci level and then bouncing from this level, then breaking the upper line of the wedge and advancing higher. This red line is very important for the long-term situation because it's a line connecting recent long-term lower highs. And we bounced from it also at the end of the last year and at the beginning of this year. And only breaking this line can trigger a long-term buy signal. So far, chances for that are well, slightly higher than slightly above 50%, but it's not convincing enough to open long-term long position, especially that probably if they will try to attack it, it will happen somewhere here. So we will have also a horizontal resistance here, which was already present on the chart since December 2014. So as you can see, this resistance is very, very important. So we will have a combination of two important resistances, a horizontal one, an orange area, and a trend line, which can create a possible strong place for a bearish reversal. Okay, to wrap this up, the closest sentiment for the nearest few days is an upswing, right? Is an upswing, breakout of the upper line of the wedge, and a bullish continuation here. Euro to Australian dollar is in a very interesting situation. Maybe let me start from the weekly chart, where we do have this long-term support here labeled with yellow color. This support was active in 2014, in 2015, and 2016, not, and is tested now in the second month of 2017. And what we had here was 2 weeks ago, we had a nice reversal, well, attempt at least, because the price touched this support and created hammer. That was kind of a good opportunity to buy. Well, now we can see that it wasn't, but it was potentially a good opportunity to buy. Obviously, keeping in mind that going against the trend is always very risky. But the next week the price also created a hammer. At the end of the week they managed to pull the price higher. That created kind of a double bottom formation, two hammers, which can be considered as an optimistic signal. And as you can see, traders are following this signal. Maybe not, there's no panic buying here, but the weekly candlestick so far is bullish. This creates an opportunity for a reversal, but in the same time, remember that going against the trend is always more riskier than going with the trend, right? Myself, I'm a trend follower. I try not to go counter trade, but sometimes like one of 20 fights, 20 trades, I'm sorry, not fights, one of 20 trades, 30 trades, I can go against the trend if I have significant signs that trend can be reversed. Is that a significant sign that trend will be reversed? Well, on H4 chart, as you can see here, we do have this double bottom formation. We broke the mid-term trend line and the price advancing higher. Actually, we just made new weekly highs. Well, it's just Tuesday, but anyway. I said that when chances for a reversal are high, I can think about going against the trend. Here chances will be increased once we will be able to break this horizontal resistance here labeled with blue color. To this resistance we do have 90 pips, 80-90 pips. Better to be safe than sorry, so let's say 100. If the price will advance 100 pips higher, that can be a positive sign for buying. You may think that waiting 100 pips is just a waste of time and obviously money. Well, I wouldn't agree with this because remember, it's going against the trend. So if you're going against the trend, you're thinking about trend reversal. If you think about trade reversal, you're looking for a long-term investment and a huge profit, right? When you're going against the trend, you're looking for a situation to earn hundreds of pips, right? So if you wait a little bit, just to gain a bit of certainty, you're gonna have like 300 pips stop loss, or maybe lower, maybe somewhere here, 100. But you're expecting at least, let's say, 360, 400 pips, right? So going against the trend should give you a great risk to reward ratio trade. Should give you significant profit with relatively low risk. With these conditions, you can lose 50, 100 pips just to gain a bit more certainty, which is absolutely important. When going against the trend, you are looking for increased certainty because this probability of a trend reversal is very low. So every single idea, every single factor that increases the chance for a reversal should be priceless for you and should be taken into the consideration. And in my opinion, price advancing 100 pips higher can be such a factor, right? So this is the situation on euro to Australian dollar. Australian dollar also brings us a nice opportunity here. Starting with the long term, what we had is a downtrend from March, then a side trend. But side trend also created maybe not the prettiest one, but still inverse head and shoulder formation. So we do have a left shoulder, head and a right shoulder. The price touched an important horizontal resistance, which in the same time was a neckline. Price after that created a shooting star. It's a pity that we didn't see this situation earlier, because that was a nice trading opportunity, which now would result in 50 pips, which for this pair is quite a good score. So we do have that was a beautiful sell signal, right? But can we follow it now? Well, on H4 chart, you can see that potentially yes. Why is that? Because we do have a head and shoulder formation. We do have a left shoulder, head, and a right shoulder. we're about to break this horizontal support here. To this support we do have 90 pips so far. In this time frame we do not have a sell signal. It's still present on a daily chart because we are under influence of this bounce with the shooting star from a horizontal resistance, but on H4, red line is the place where you will get the sell signal being triggered, right? If the price will get to the red line, that would trigger a sell signal in the midterm. Closest support is obviously 38.2 Fibonacci level, so it's not an amazing risk to reward ratio, but potentially this downswing can go lower, at least like to this horizontal to 50% Fibo, right? In terms of risk to reward ratio, what would we have here is going slightly above 1-to-1, which is still not the best. Some of the traders would tell you not to open this trade if only risk to reward ratio is only 1. But that's an interesting technical setup here. Gold, beautiful upswing we are having. You know, situation on gold, because we are talking about situation on gold on our every meeting. So what's new? What's new is that the price in the last week broke horizontal resistance on $1,245 per ounce, and yesterday we had a correction aiming this level as the closest support. As you can see, buyers hold the price high. They hold the price high all the time. They do not allow the price to go any deeper, which is a very positive sign for buyers. We soon are about to test very important resistance created by connecting recent important lower highs. Maybe not recent, maybe those from starting from the top of the trend, so from July. This level we do have still $22. Chances for price getting there are very high. I don't know if you used this comeback to this level to open new positions, or maybe you were waiting for the price to get a little bit lower, like 10 pips lower than now. 10 pips lower than now and 6 pips lower than from the lowest point. But sentiment on gold is really positive. In terms of the risk to reward ratio, what do we have here now is $12 stop loss more or less, and $24 take profit, so it's 2-to-1 more or less, which makes this trade interesting, at least interesting for some of you. A bit of, or maybe before going with this exotic instrument, let me show you silver. Silver yesterday created a sell signal from the single candlestick, like it's a shooting star. Obviously it's not a strong sell signal, it is kind of sell signal. Not many people follow that. Sentiment here is still positive, in my opinion. The price is very far from the major trend line, is even far from the midterm trend line. So here everything is under control, and also silver has its own target. It's $18.75 per ounce. And we should get there soon. 40 cents from the current price. This is the potential target for silver. Okay, so exotic instrument, American dollar to Polish zloty, close to me, probably very far to you. What do we have here is I want to show you it from the technical point of view, because we had it's a daily chart. So we had this beautiful downswing here. This one was almost the same, right? Around 5,000 pips. 450, I'm sorry, 4,500 pips, 4,500 pips, and maybe we are expecting another one, especially that we do have a trend line here, and an uptrend trend line likes to be tested. Also, we bounce from this horizontal resistance here on 4.10. We bounced with candles with long heads, with shooting stars, 2 shooting stars, and the most probable scenario here is the price going to this support, which creates a nice opportunity in terms of risk to reward ratio, because stop loss would be somewhere here, 400 pips, and we are having about 900 pips profit, slightly above 2 to 1, which again makes this trade interesting. Cable is having a roller coaster recently. So we had an excellent Tuesday, Wednesday. This is Monday, Friday, Wednesday, Thursday. Then on Friday, the price was kept relatively high after this breakout from this symmetric triangle. But then at the end of the day, the price retraced sharply. And the Monday started with huge worries, with a continuation of this movement. It's about Scottish independence referendum. Then part of this downswing was retraced, and now we are more or less locked in a side trend. The closest resistance is here, the closest support is here. If you're believing in a downtrend on cable, the best idea I'm thinking about is pending order below the green support, right? So far the sentiment is neutral, so far the sentiment is mixed, I would say. As long as we are above the green line, there is a hope in a bullish camp, there is still a hope in a bullish camp. If the price will break this green support, that should also destroy all the hope on the market, and that can introduce the sell signal here on this instrument. Euro to American dollar. As you can see, in the past few days we are a little bit mixed. The price is making lower lows but also higher highs at the same time. We kind of break outside of the wedge formation here, but this breakout is not convincing, at least it does not convince me. So I wouldn't say that this breakout is technically significant. I wouldn't say that the price just broke the upper line of the wedge, but I would say that they just came out of the wedge, which is actually not the same thing. It's different, because breaking the upper line of the wedge creates a buy signal in this case, and when the price just crawls outside of the wedge, there is no signal here. So euro dollar, well, not the first time, as I'm not the fan of euro dollar. I don't think it's a very technical instrument. So not the first time this situation on euro dollar is just boring. I don't know why traders stick to this instrument. Australian dollar to American dollar. We're trying to make those corrections equalities. Well, in theory, you should get an upswing, then a correction of 70 pips. Those rectangles are the same, and then trend continuation. Here, for the past few days, you have this downswings for 70 pips, and then you have movements, you have bounces for 30, 40 pips, which is not the best thing you can see, right? But you can still benefit from it if you're a short-term trader, and you know that price is making corrections for 70 pips. You can have 10 pips stop loss and then benefit with 3 to 1 position. So you can get 30 pips upswing when you sacrifice 10 pips for a stop loss, right? Like for example here, downswing started, instead of 70 pips, we made 77, so your stop loss would be safe. Hypothetical situation, you bought here, you had a 10 pip stop loss, so it wouldn't be triggered, and you would close, for example, on 30 pips profit. Okay, fair enough. 3 to 1, beautiful. We don't know for how long those patterns will be continued. We had few of them. We have a first, the closest support, then another one. I would say that as long as we stay above 38 point of Fibonacci level, the sentiment on Australian dollar to American dollar is positive, but we should see a deeper correction here soon. Well, at least I wouldn't be surprised if I would see one. New Zealand dollar to Japanese yen. On this instrument, we do have a double top formation and an attempt to break the neckline. Breaking only this red line is not significant for me. I would love to see the price below the horizontal support here, and in my opinion that would only that would trigger a sell signal on this instrument. At the same time, don't forget the line connecting recent lower highs, because breaking this line can end the hypothetical bearish situation here. You know, this color may be kind of green, like that. Australian dollar to Canadian dollar. Here we had a false breakout. So we had the first false breakout here, where head and shoulder was created. Actually, this head and shoulder resulted in the movement that it's supposed to do, because this is how you measure the potential target for head and shoulder formation, is that you measure the distance between the neckline and the top of the head, and you put it on the place where there was a breakout of the neckline, and then you see the potential target of this formation, and it was done, right? The price made the potential target. I do not believe in potential targets of head and shoulders formation, but many people do, and it's written in very good, interesting books. So that's why I'm showing you that. That was a false breakout. It resulted in a downswing, and in my opinion that is a false breakout as well, and it results in an upswing. So the current sentiment still is positive, no doubts about that. British pound to Canadian dollar. It will take a long time to fulfill this buy signal here created by a bullish engulfing. I'm waiting for a breakout. I don't care if it will be bullish or bearish breakout. We are about to break the upper line. Let's say this one is more accurate in the shorter term, because the blue one is accurate in the longer term. As long as we stay above the green line, the sentiment here can be positive, right? Also, it's a relatively good trade in terms of risk to reward ratio, because risk is 160% pips, which in case of this pair is low, right? 160, and you can take 1,300 pips. So 8 to 1, which makes it one of the best risk to reward trades here in this group. Here, no, those I will show you maybe tomorrow. What I would like to show you as the last instrument is oil and DAX. Oil cannot force the resistance on 57.4. They are struggling to break that resistance. I would say that sentiment here is negative. I'm bearish on oil. I'm waiting for the price to break this line and head to the lower line of the symmetric triangle here. And on DAX, as you can see, we are still suffering from that decline from the last week. The price cannot come back above the trend line. At the same time, they bounce from the horizontal resistance here. We are on the daily lows, and the sentiment in the midterm, not in the long term, is negative. Maybe let me delete those Fibonacci's. That formation is no longer relevant as well. What I'm seeing here is the neckline of potential left shoulder, head, and right shoulder, of head and shoulder formation. Okay, here. Price being here will be a midterm sell signal for me. The same as when price was here, that was a midterm sell signal, and it's on the table right now. Okay guys, thank you very much for watching daily analytical report. Keep in mind that trading and investment in financial markets involves an element of risk. In the meantime, follow us on our Twitter, where we post our trading views, which should be very, very helpful for your trading. And also visit our website alpari.news. Thanks very much.